Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Kiana Daniel. She is the CEO of Invest Diva and also the author of Cryptocurrency Investing for Dummies. And we're going to take a look at how Fed rate cuts can impact cryptocurrency. Kiana, it's great to have you back with us as always. Now, when you think about the Fed, your first thought isn't to go into cryptocurrency and the impact. How can it hurt Bitcoin prices or help?
Well, with the Fed, with the current state of economy in the U.S. in general, a lot of investors are hedging. Some are going to gold, and many institutional traders are actually, and investors are actually going to digital gold or Bitcoin. And that's the reason why we've been seeing this inverse relation with Bitcoin and U.S. equities. Every time the U.S. stock market goes down, whether it's the Fed rate cuts or whether it's trade war, Bitcoin price has been spiking up. So Bitcoin is really becoming a hedge. And I mean, another way that you can look at it is because the Fed rate cuts and again, the panics about what's going to happen to the economy. Are we going to be able to sustain the expansion? And is the US dollar going to be able to really weather all the geopolitical tensions with China and, and we have Middle East and we have Euro, there is a chaos. So Bitcoin is really turning into a safe haven among all of this.
All right, now you're certainly getting bipartisan pushback on Libra and and other cryptocurrency forms for a number of reasons. I think part of it is regulators don't understand it yet. Of course, you have how the Fed would respond or all the global central banks would respond to digital assets. Do you think we can move beyond that pushback?
So there is a case to be made for Bitcoin that cannot be made for Libra and Facebook. Personally, I don't think that Facebook's Libra really sits well with Bitcoin's ideology, which is about being peer-to-peer, being decentralized. Facebook is trying to become the central bank of the world with all the power, with all the data that they have. They know exactly what you're doing, who your friends are, what your interests are, and now the only thing that they didn't have was access to your social security and your wallet, and with Libra they're trying to access that, and that is going to give Facebook a humongous amount of power, which personally I don't think is a great idea unless they decide to become decentralized. Right now they're centralized. I think governments are actually right to be pushing against it. Bitcoin has a different case, and it is permissionless. So I don't think at the end of the day, the governments, well, right now Bitcoin is smaller, but Bitcoin is permissionless. So right. they can't just say, like, who do you sue? There's no company of Bitcoin. Like, you can't push back against.
And is that what you mean when you say peer-to-peer cryptocurrency, that you don't need a platform in between to broker?
Exactly. So peer-to-peer, Facebook will be peer-to-peer because you're all going to be connected with, Instagram or WhatsApp or any other applications that Facebook owns. So you're going to be sending and receiving Libra as currency within your wallets. It is a cryptocurrency in a sense. It is going to be peer-to-peer. There are not going to be any brokers involved as far as I know, but it is centralized in the sense that Facebook owns it and Facebook is monitoring it.
Right. So
Facebook is going to be in charge of your money.
So how do you determine the value of Libra? Is it really based on the market of the internal Facebook users?
So what they've been going after right now is they want to peg it to a basket of currencies around the world so that is not as volatile as Bitcoin, because one of the criticisms against Bitcoin is that it's too volatile. So if you buy something today using Bitcoin tomorrow, it's going to be a completely different price. So that is something that Facebook and some other crypto altcoins have been trying to address as well. So the price fluctuations is not going to be as harsh as Bitcoin if they pass through all the governments that are really going against it.
So to wrap up here, that's the positive thing about cryptocurrency and digital assets and what we're seeing with blockchain technology. This provides banking to those who are unbanked or underbanked because you can go peer-to-peer.
Exactly. So there is a case now to be made for Facebook's Libra, and it is optimized to be accessible by anybody with a cell phone. Bitcoin, we're seeing a lot more transactions now. Square.com actually just had their record sales in Bitcoin and transactions. So there are more and more people who are using Bitcoin, but it's not as accessible. Facebook really is going to be helpful for those who don't have a bank account in anywhere in the world, who only have a smartphone and an internet connection, to start buying and really participating in the global economy. So.
Right, but you could do that with any kind of digital asset.
No, not necessarily.
Okay.
Digital asset, cryptocurrency, yes, but digital assets that are actually like government-backed currencies. So, for example, even in the U.S., people who are undocumented, who don't have a social security number, who cannot open a bank account, they only can send and receive cash. So, with digital currency, they can't actually really start anything with their smartphone and access the global economy all around the world. So, cryptocurrency and Facebook is going to really tackle that problem of people who don't have access to the banks.
All right, and you can see why the regulators and the central banking agencies can have some concern around that. Kiana, great to see you as always. Thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.